So I want to just get back to the QDT again, and just also the other important element to remember about QDT in terms of all those criteria is that you can only have one QDT trust, and so you're limited. And so, and this is becoming common where if you have multiple trusts, you want to ensure that you choose the trust where making it QDT will be most advantageous. And so typically it's a trust where there's the greatest potential for earnings and where that marginal rate of tax will benefit. So it's important to recognize that you're limited to one QDT.
And so that is the person with the disability is limited to one QDT, not to the person who's setting it up. So
That's
if it's
right.
a parent who has two children, both with disabilities,
Yes,
they can set up two separately, one for each of them.
absolutely, absolutely. Now, if you don't meet these criteria, there are serious implications, and we call these recovery tax implications. And effectively, what it means is that if at any point your trust is not QDT, CRA or Revenue Canada is not very forgiving, and they will effectively treat that trust as without QDT, and therefore they will automatically assess it at the highest marginal rates. So it's absolutely vital that the trust be and remain QDT for it not to have these recovery tax implications. And understanding that if your beneficiary doesn't have eligibility for DTC, or the trust ceases to be a resident, or a distribution is made to a non-QDT or a non-disability tax credit beneficiary, you now have recovery tax. Unfortunately, there's no relief in the legislation. So if you're late in filing your election, Revenue Canada says too bad. We're gonna tax you at the marginal rates. Um, this is relatively new, and it's very strict. So it's absolutely vital that the trustees understand the importance of some of these criteria.